Welcome back to the channel. So it's Monday again. So as you know, I normally do my I send a free analysis on Monday. So this week I thought I'd go through gold, as that is the main pair that I'm looking at going into this week. So if we get straight into it, and we will start on the 4-hour, as this is where the trade originated from. So going back to around March 2023, we had this area of 4-hour demand here, which was induced by this pullback but never actually retested, and it also left this bit of inefficient price action just here when we had that impulsive move up, taking out this structure to the left. This wick here also swept liquidity to the left, making it a strong level of demand to go off. If we also go now to the lower time frames and refine it, we can see that the main area of demand that caused the break of structure was this 15-minute zone just here. And if we go back to the present day now, what you can see is that price perfectly came into this zone and then immediately impulsed up, taking out this structure here. So that is our change of character. If price had just done this, I wouldn't have been looking for buys here, since it could have just been a liquidity grab. But since we also got a further break of structure when price took out this high, that kind of validated the zone for me. So we have this further break of structure now. And if we go to the 45-minute, this is where it looks most clean. You can see price has come into the 4-hour area and then has started to shift structure to bullish price action, taking out this high and also forming this higher low here. So personally, what I'm going to be looking at is for price to come back into this area of demand, as this was left imbalanced by this big push up, and it was also induced by this wick just here. So at the end of last week, price was retracing down towards our zone, but never actually came into it. So with gold, what you often see is that price will do something like this, create that new structure, so create this higher low, and then it will leave the area of demand unmitigated for it to later come down, take out the liquidity, and tap into the demand, and then go in the intended direction. Yeah, so what I'm going to be seeing this as is, from an inducement perspective, we have this structure here, where I know a lot of people will probably be looking for buy positions. If we just go real quick to the 1-hour, pretty much every type of trader, whether they trade SMC, break-in retest, support and resistance, whatever they might trade, pretty much or nearly all of them will probably be looking at a retest of this sort of area. SMC would see this as an area of demand, entering on the retest of this after the break of structure and after the change of character. Break-in retest traders will probably be entering somewhere around where price is right now, on the retest of this current structural high after the impulsive move up. And also support and resistance traders will probably be entering somewhere around 1900 at the retest of this higher low. However, what we want to do is we want to be looking for entries when those traders are taken out of their position, entering on their liquidity essentially. And that is the reason why I see price coming back to this extreme demand here, also because of the imbalance. And this level, in my opinion, is a very strong level of demand, since it created this imbalance first of all, was induced by this wick, and also swept all this liquidity to the left. If you notice how price was sort of consolidating above the demand, we had that one final push down, then the impulsive move up, breaking structure and sweeping this liquidity where people would have been buying early. So as for targets, I see price heading towards this area of supply just here. On the daily time frame, we are technically still bearish, as we have had no daily break of structure. So this sort of area here would be the last area where I'd be looking for sells. If we do manage to break above this, then we could definitely see some longer term sells back up to target, these highs at around 1980, and perhaps even back up to all-time highs or this area of supply somewhere around that region. But for now, short-term target is 1924. which is this area of supply, which swept this liquidity to the left and was untested and created this imbalance just here. So that is pretty much it on gold. If you wanted to be a little bit more conservative, you could wait for that confirmation style entry. So seeing something like this, where we come down, maybe get some sort of equal lows created above that demand. Price comes down, sweeps the equal lows, breaks this structure, and then we get in on the retest, buying up to that 1924 area of supply. If you are a bit more of an aggressive trader, in my case, I'm quite a conservative trader. However, I would enter just on a limit in this case, since it was already confirmed by this break of structure. So we could simply just set a limit at this area, targeting this supply, like I said. Quite a big stop loss, but you know, with gold, 58 pips isn't really all too much, given the amount that it moves per day. The average true range is like, what is it down here at the moment? It moves more than 100 pips per session, basically, so it's not really that much. But yeah, I hope you guys found this video useful. As with last week, make sure to leave any pairs in the description below that you want me to analyze every Monday or on a regular basis, and I will look into those pairs as well. If you guys also want to copy all of my trades as limit orders, so you have to put minimal effort in, just set the limit and then go about your day, I will leave a link to that group in the description below. But yeah, wishing you guys all of the best for the first month of Q3,